Good morning and welcome. This is NDTV Profit. My name is Mathew and you're watching All You Need to Know. Over the course of the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. Let's start with the headlines. Rate cuts are coming. The US Fed indicates that there will be 3 rate cuts of 25 basis points each in 2024. It keeps the policy rate unchanged for now. Bond yields plummet in the US. The yield on the 10-year Treasury is now below 4% or thereabouts. The risk on sentiment pushes US stocks higher. All benchmark indices close at record highs, and the dollar index falls too by about 1%, currently trading at 102.76. Oil prices recover on a bigger than expected weekly withdrawal from US storage or crude storage. US inventories fall by 4.3 million barrels against expectations of a decline of only about 650,000 barrels. Back home, the Gift Nifty is indicating a strong start to the day. Indian ADRs trade higher, indicating a positive start to trade. Abhyudaya Cooperative Bank's ousted chairperson Sandeep Kandat takes the RBI to court. This is happening after the regulator superseded the board of Abhyudaya in November, citing material concerns related to poor corporate governance standards. After a dramatic gridlock at the COP28, countries finally agreed to a historic resolution to transition away from fossil fuels. And the United Nations General Assembly votes in favor of a ceasefire in Gaza. The United States and Israel were among 10 nations voting against the ceasefire, while India voted in favor. The non-binding resolution is primarily symbolic. Now, the big headline this morning is the outlook from the US Federal Reserve. The Fed kept its key interest rates steady, which was in line with expectations, but more importantly, it indicated that it would cut rates thrice next year. The decision to keep rates unchanged was unanimous, and that means that rates have remained unchanged since they were last hiked in July, and they remain at the highest in 22 years. The median rate forecast for 2024, though, fell to 4.6% compared with 5.1% in September, and that's according to the Fed's economic projections, and that implies 3 rate cuts in 2024. Bond yields have fallen sharply overnight, with the yield on the 10-year Treasury falling to below 4%. Remember, they were close to 5% less than a month back. And the risk on sentiment has pushed equity markets higher, with the 3 benchmark indices closing at record highs. In fact, all 3 of them gaining close to 1.5% or thereabouts. Meanwhile, the dollar index has fallen and is currently at 102.76. Here's what Fed Chair Jerome Powell had to say, a portion of it.
Inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain. As we look ahead to next year, I want to assure the American people that we're fully committed to returning inflation to our 2% goal. Our actions have moved our policy rate well into restrictive territory, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening likely have not yet been felt. Recent indicators suggest that growth of economic activity has slowed substantially from the outsized pace seen in the third quarter. Even so, GDP is on track to expand around 2.5% for the year as a whole, bolstered by strong consumer demand as well as improving supply conditions. After picking somewhat over the summer, activity in the housing sector has flattened out and remains well below the levels of a year ago, largely reflecting higher mortgage rates.
Let's delve a little deeper into this and what this means, of course, for emerging markets as well. We're joined by Dr. Richard Harris, Chief Executive Officer of Port Shelter Investment Management. Thanks so much, Richard, for taking the time this morning. What did you make of the latest development? Were you expecting rate cuts in 2024 and this extent of rate cuts?
Well, I think we were expecting rate cuts. The market has been talking about rate cuts for probably about 2 months now. The only interesting thing about it is that you know the old mantra, which is buy on the rumor, sell on the fact. Well, people have been buying on the rumor for the last 2 months, but people still seem to be buying on the fact. Now, the interesting thing is that the markets have been predicting something like 5 25 basis point cuts, say, until the middle of next year, which is around 1.5%. Now the Fed's talking about maybe 3 of those, and probably 3 25 basis point cuts. That's actually, I would have thought, should be a disappointment for the market. But I think the key theme that's coming through is markets like interest rate cuts. They've got some positive confirmation that it's going to be happening. And I think we're in for a Santa rally.
What can you tell us about how global flows will likely pan out based on what we know? You've seen the bond yields in the US come off very sharply. The 10-year now trading at very close to that 4% mark. And 23rd of November, I checked that number, 23rd of November, where it briefly touched the 5% mark intraday. What happens to global flows?
Well, I mean, there's an awful lot of different narratives in there. And one thing about all these narratives is not necessarily that there's one narrative or another, but how they actually combine and work together. I think the bond market really has seen a reaction, quite a sharp reaction to what's been happening. And I rather suspect we'll see a period of stability there now because most of the energies really pushed itself out of that market. It does look as if equities are going to be encouraged by the kind of moves we're seeing from the Fed. But of course, we need to keep our eyes on 2 particular factors. One is exactly how much economic growth is slowing. We kind of know that's happening, that's in the market, but how much is actually happening? And the other thing is what's happening to employment, because employment is the real key in the US and how it will affect interest rates. Because if employment, which at the moment is pretty well full employment, goes, say, from unemployment 3% to unemployment 5%, okay, we can pretty well handle that. If it starts soaring, then I think we will see the Fed cut more. At the moment, the economy looks reasonably stable, and I don't think that the Fed is likely to be in a position where we will cut more than 1 or 2 times before, say, the end of the first quarter.
Okay. Can you tell us what to expect from emerging markets then? Because one would assume, and based on what you've said as well, and you say there are a lot of narratives at play, but one would assume that money will start shifting into emerging markets. The question is, where do they go? Because some would say, looking at India as well, and the reason I'm asking is because of that, is that we are at all-time highs. Some would say that we're expensive. So where does money go according to you?
Well, when you do get slightly looser money like this, and maybe the US dollar coming off, that tends to be good for emerging markets. Now, you've got the old thing of this time it's different. But I think that, if we are going to see positive moves in the US, we eventually are going to see money move out, as it always does. Money moves then from developed markets more into emerging markets. I think with India, what we have to remember is we're seeing a different kind of paradigm operating. India's been a very strong market, paralleling the US, if you like, in terms of how it's moved. And I think that's positive. And as far as the US continues, I see India continuing. What I do think, though, is that although the Chinese economy is in a very difficult position, there's been no real good news for a while, and green shoots are hard to come by. But my guess is that the Chinese markets probably are near the bottom, partly because I think in the new year we may well see the Chinese authorities look to reflate that market, which will obviously be good for stock markets. Stock markets tend to react early, and that's why I think we may be near the bottom of that particular issue in China, even though we haven't seen any activity yet. So, yes, if we see the markets continue, that'll be good for emerging markets.
Dr. Harris, far be it for me to spoil the mood this morning, and I think there will be cheer in the equity markets here as well. But is there anything that you think will play spoilsport at the start of the new year?
Well, of course, I have this rule called the Harris reversal rule at the end of every quarter, which is rather a long name. However, very often you find that if you've had a very good quarter, around the time that the quarter ends, and of course we're looking at 31st December, 1st January, we may see a difference in mood. We have seen real risk-off mood, I think, over the last quarter. Yes, we may see markets slightly turn towards the narratives that are more negative than the narratives that are more positive. So keep an eye out for the first week of January.
Fantastic. Thanks so much, Dr. Harris, for taking the time for speaking to NDTV Profit. All right, let's shift attention to oil prices, and Brent has recovered from the 5-month lows that it touched yesterday. This after U.S. weekly crude stockpiles showed a much bigger than expected withdrawal of 4.3 million barrels. OPEC, however, in its monthly report has said that it remains cautiously optimistic about 2024 oil market fundamentals. To find out more about the current context and how it's shifted, we're joined, of course, by Mihika this morning. Mihika, what can you tell us about the latest?
Yes, so the OPEC released its monthly report for December 2023, and the 2023 global oil demand forecast remains unchanged at 2.5 million barrels per day. The downward demand revisions in Europe and Asia Pacific were offset by the upward revisions in America. And the 2023 non-OPEC liquid supply growth forecast also remains unchanged at 1.8 million barrels per day. And with respect to 2024, the crude oil demand forecast remains unchanged as well, while the non-OPEC liquid production is expected to expand by 1.4 million barrels per day. With respect to India specifically, the 2023 global economic growth rate was revised upwards by OPEC by 0.3% to 6.5%. India's moderating economic trend so far will continue into 2024, OPEC states, with the services sector being the primary driver for the growth. And with respect to oil demand in the first quarter of calendar year 2024, it is projected to grow by 277 trillion barrels per day on a year-on-year basis, with distillates being the primary growth driver, and this will also be supported by segments like harvesting, manufacturing activities, and construction. And with respect to the oil demand forecast for 2024, it will see a growth of 220 trillion barrels per day on a year-on-year basis.
All right, thanks so much, Mihika, for bringing us those details. Now, the indicators are that we could be seeing a strong start to the equity markets here in India. And to tell you more about what to expect on expiry day for the weekly options, we've got Agam joining in. Agam, so there's a lot to take into the start of trade today, and it was anyway likely to pan out to be a volatile day of trade. Right. What can you tell us about the key indicators?
Alex, two things. Right at the top, there is a lot of concentration around the 21,000 calls, which means a lot of traders have written those calls, and should we see the Nifty open above that mark, we're going to see a bout of short covering, and that's in fact going to lead the markets even higher at that point. And let's not forget, when it comes to FII concentration towards longs, it's at the highest since September, standing at around 58% as far as index futures go. Speaking of index futures, unwinding in the Nifty futures to the tune of nearly 3.8%, even as the index remains flat. So I reckon that at least some traders really didn't want to take their positions forward before they actually got to know the outcome from the Federal Reserve. And as far as the Bank Nifty is concerned, well, the picture isn't very different either. We have seen further unwinding even as the underlying remains flat. Now, speaking of the point I was trying to make earlier, when it comes to your open interest distribution in the Nifty, we are watching out for 21,000. And as I was suggesting, if we do see that Nifty does open about 21,000, there will be further impetus upwards, at least for some time. Whether or not there will be profit taking towards the end of the session is something that we're going to wait and watch out for. But speaking of the changes in OI, as you can see here as well, a lot more writing coming through yesterday between 21,000, 21,200, 21,300. Let's talk about stocks then, and talk about all those companies which are in fact seeing an increase in OI. So PI Industries, of course, it did see some shorts building up along with Apollo Tyres, Concord, TVS Motor, as well as Vedanta seeing longs building up. And about a short covering for Birlasoft, Alchem, as well as Dr. Laboratories, and LTI Mindtree along with L&T Tech well, saw longs unwinding. But I reckon today, Alex, it will all depend on what the FIIs do based on the kind of commentary that's come from Federal Reserve, and on the back of that, we'll be watching after benchmarks.
All right, thanks so much, Agam, for bringing us those details. Do stay tuned. We've got stock-specific action lined up for you after this very quick break. We'll be back before you know it. Welcome back. You're watching All You Need to Know. Let's focus in on the stocks that you should watch out for in trade. We're first joined by Varsha, who's got her list of stocks to talk about. Varsha, morning. What are you picking up?
Good morning, Alex. So let's start with NBCC India, where it gets order of rupees 1,500 crore from National Corporation Development. Then the order is for construction of 1,469 warehouse and various other agri infrastructure across India. The order book as on September 2023 stands at 55,000 crore. And also they've got guidance for FY24, where they aim to aspire a revenue of 11,000 crore, and they do have long-term guidance for next 5 years, where they want revenue will be almost 25,000 crores and part of 1,000 to 1,200 crores. Then we have IRCTC, which is planning to expand operation in non-railway catering business. The company is in active phases of commissioning 15 more catering units across the country. And if you see the revenue contribution as on Q2 FY24 of catering segment, which contributed almost 43%. Then lastly, we have Biocon, where unit Bicara completed $165 million Series C funding, which is to support Bicara's lead product candidate, which is in multiple clinical developments for multiple cancer types. And the post-funding, Biocon's shareholding in Bicara to fall almost below 20%, and it will cease to be an associate company. And Biocon's current stake in Bicara Therapeutics as on March 23 is almost 39%.
Understood. All right, there are several more stocks that we need to talk about. In fact, on the back of bulk deals, we will soon have Mahima joining in to tell you more about that. Mahima, so there are, I believe, a few stocks. So Indigo, as well as State Bank of India, GMR Power, Axis Bank on your list. What can you tell us about that?
Right. So Indigo becomes the 6th largest airline by market cap. This is as of yesterday. The stock has touched a life high of 3,007 yesterday and gained over 2% in trade. If you see the passenger traffic has now come to pre-COVID levels, and the market share has risen like over from 30% in FY14 to 63% in October 23. Morgan Stanley's put an overweight on Indigo with a target price of 3,522. The company held its analyst meet yesterday, and that is why we had a Morgan Stanley report yesterday. The next one is Vedanta. Vedanta, if you see, the dividend has been growing every year. For FY23, the dividend yield was 37%, and it is considering its dividend interim dividend in the next meeting, and we are expecting a good dividend because so far it has declared a dividend of 18 rupees only. The next stock that we have is SBI. SBI is signing a 17 million euro line with a German bank, KfW. Now this is good for bank because their NPAs have significantly reduced, and this deal is for lending support to solar PV, and this deal is to be signed in the Gift City. The next two stocks to watch are bulk deals. If you see, the first one is GMR Power, where the UK-based ASN Investments sold 2.31 stakes. We now know the seller, that is ASN Investment. The buyers for the same are Monat Sek and Sahasra Advance. The next that we have is Axis Bank, where a bulk deal again took place yesterday and sold 1.08%. We know the buyers and sellers. Again, in this case, the key seller is Integral Investment South Asia and the BC Asia Investment 7. And we also have one more seller, which is BC Asia Investments 3. So these were the bulk deals that took place yesterday and the key stocks to watch out for today.
All right, thanks so much, Mahima, for those details. Now, not something that you hear about every day. Sandeep Gandat, who is the erstwhile chairman of Abhyudaya Cooperative Bank, is dragging the Reserve Bank of India to court against an order that was issued last month. On the 24th of November, the RBI superseded the board of the cooperative lender and appointed an administrator, citing concerns related to poor corporate governance standards. Mimantsa has been tracking this. Mimantsa is joining us to tell you more. What's the latest here, Mimantsa?
Hi, good morning, Alex. Abhyudaya Cooperative Bank's former chairman, Sandeep Gandat, has challenged the RBI's decision to supersede the bank board in Bombay High Court. Now, this is a big one and a rare occurrence because the last time this sort of incident had happened was in 2018 when Uday Kotak, former MD and CEO of Kotak Mahindra Bank, had moved the court against the RBI. Now, the case petition by Gandat is still in the pre-admission stage, which means it is yet to be admitted to be heard in the court. But through this case, the expelled board of directors is expecting the court to keep the bank in the RBI's supervisory action framework and allow it to continue the business operations under restrictions. But what are the grounds for them to move to the court will be known once the petition is accepted and as and when the developments unfold.
All right, but Mimantsa, to talk about the case in a little more detail, why did the RBI make the move in the first place?
Yeah, so in November, the RBI had superseded the board of directors for 1 year due to concerns over poor governance standards. Apart from the governance issues that the RBI has highlighted, there were other poor financials that were that the bank was going through, and it was in a severe crisis. The net worth of Abhyuday Cooperative Bank had fallen to negative territory at minus 173 crore rupees as of FY23. This is because the bank had to make additional provisions of rupees 193 crore against the security receipts that it has held. In the last 2 years, while Abhyuday Cooperative Bank has trimmed down its bad loans by 350 crore rupees, but its net NPA ratios stood at 12.9% at the end of FY23. Even the capital adequacy ratio has been consistently low and still falls short of the criteria under the RBI's supervisory action framework. So quite a big and rare occurrence in the Indian banking space, but we will know more about this when the court hearing happens which is scheduled on January 4th, and that is if and when the case petition is accepted by the court.
Understood. Thanks so much, Mimantsa, for bringing us those details. We will touch base with you once you have more clarity on that. Let's talk about the primary markets then, and they continue to buzz with subscriptions for DOMS as well as India Shelter having opened yesterday, and they were fully subscribed on day one itself. And we've also got another IPO, that is Inox India, set to open today. Saloni is joining in to give you some perspective on these three IPOs. Saloni, morning. What can you tell us about the latest?
Good morning, Alex. So, as you rightly mentioned, both DOMS and India Shelter Finance have been, fully subscribed on day one itself. DOMS specifically led by the retail investors, having bid over 19 times, and then by non-institutional investors, which bid around 8 times. Even for India Shelter Finance, which kind of got a subscription, towards the end of the day, and NIs and retail investors both bid around, 2 times. And we did talk about this extensively yesterday. How the valuation of these companies and the fundamentals, both are something that, analysts have said that, works, and that's why they've given a thumbs up to the IPO. So that is one of the reasons maybe that, that they saw such great demand. Talking about Inox India, which is about to open today, it is priced in the range of 627 to 667 per share, and the company aims to raise rupees 1,459 crore. Now the issue is entirely an offer for sale, which means that the company will not receive any proceeds from the offer, but it will be given to the promoters who are selling the shares. The company is the largest supplier of cryogenic tankers in India, and it is well positioned to capture global market growth and LNG product range, which may work with for the company and also lead to the earnings momentum that is expected in the coming quarters. Talking about the valuation, if it's actually something that attractive enough for the investors to subscribe, now it is valued at 39.2 times, and it has an implied market capitalization of rupees around 6,000 crore. So analysts say that this issue is fairly priced. So we'll have to see throughout the day how the subscription numbers look.
All right. Thanks so much, Saloni, for bringing us those details. The last story we will talk about today is the update from COP28 and representatives from nearly 200 countries reaching a landmark deal at that COP28 climate summit to begin reducing global consumption of fossil fuels to avert the worst of climate change. Mika is joining in to give you some updates from that summit. Mika, landmark update here. What can you tell us?
Yes, so the goal is to limit global warming to just 1.5 degrees Celsius above the pre-industrial average. Now, the goal requires global emissions to be cut by 43% by 2030. To achieve this, the global renewable energy capacity has to triple by 2030 in order to reach the net zero emission by 2050. However, a crucial question that has been criticized as a gap is how will the financing happen? There has been acknowledgement of trillions of dollars of investment that is needed, but from where and when will it come from is still something that needs to be answered. answered. Reactions to the agreement have been mixed. The smaller, more vulnerable island states to climate change have shown strong support, but countries like Saudi Arabia and the OPEC countries that do control around 80% of global oil supply and get a large amount of revenues from oil supply have an opposition, and they want to focus more on the emissions. Now, the deal does offer some rewards to the oil producers. There has been acknowledgement of a technology called carbon capture. Now, while this has significant potential and has been there for a long amount of time, it has currently hampered by high costs. With respect to India, there is it's contrary to India's long-term position that coal is a very important, source of energy. However, the OMCs and the refineries have been taking changes, to include renewable energies in their portfolio.
Absolutely. Thanks so much, Mika, for bringing us those details. India, by the way, is unlikely to succumb to that global pressure to bring forward any goals on the shift to renewable. More on that later. For now, let's focus on the market and where it's likely to open and what you need to bear in mind before the start. You'll find all of that and more on India Market Open. Do stay tuned. This is NDTV Profit.